So here we go again with the small business. Primarily what we focus on here is the restaurant community and how the second round of PPP is going to take place. So we thought, hey, what better thing to do here on Barron Report is to dive into a little bit about how this is going to actually work. This is part of the CARES Act that came from the Trump administration that is now being enacted across the United States. My name is Paul Barron, and this is the Barron Report. All right, so today, as I said and promised, we're going to dive into the PPP, the second draw, how it works, and also a little about the loan programs that can take place as well. And we thought, hey, let's get somebody that really knows what they're talking about on this particular topic. Stephanie O'Rourke, who is a CPA and partner at CohnReznick out of Atlanta. Great to have you on, Stephanie.
Hi, Paul. Nice to meet you. Thank you for having me on. Appreciate it.
Very cool. Tell me a little bit about CohnReznick. What do you guys focus in on your areas of practice?
Sure. So we are, I guess, the top 10 accounting firm in the United States. We have a very large hospitality practice. I'm one of the leaders. I lead our emerging concept division. So those are all restaurant groups in growth mode. And our restaurant group, our hospitality group, we probably represent about just south of 600 restaurant groups, and that's franchisees, franchisors, multi-unit independents, you name it, we do it, catering facilities, anything in hospitality, and probably about 125 to 150 hotel groups, from Holiday Inn Expresses, the boutique hotels that you all love to stay at, as well as Marriott International, and Starwood. So really all of the spectrum in all disciplines: tax, audit, assurance, advisory. So there's really
Very
nothing
nice.
we do not do in the space.
For our audience, and most of them being restaurant operators or small business operators, everybody knows the transaction count that your CPA has to go through on a month in, month out basis is just mind-boggling, especially in the restaurant business. It's even more mind-boggling. So I can't imagine if you got 600 different clients with multi-unit locations. Oh my gosh, you're poor people there.
We do have 150 people in the practice, so we definitely have the resources to help. And so we have clients that maybe one restaurant, and then I have clients that own 175 Taco Bell. So really all over the spectrum. But yes, there's probably not a city that I don't have a client, or around the world that I don't have a client that I could eat at.
Very, very cool. Stephanie, let's dive into a little bit about what was released and what is actually started as of this week as we filmed the Barron Report. A lot of second draw PPP has started moving forward with a lot of small businesses, the restaurant industry itself. Tell us a little bit about what that second draw entails, what kind of things that business owners need to prepare for to kind of be engaged with it.
Sure. So what the Economic Aid Act did was they refined some of the rules in the first round. So people who didn't receive a first round, as well as expanded to what you could spend the money on, making it more of a working capital loan than it was in the restricted loan it was prior. And then they introduced the second draw and obviously I'm sure everybody knows that is listening in that they gave some special concessions to the restaurant industry as it pertains to that. So I could definitely go through the second draw first if you'd like, and then we could touch upon maybe on the first draw some of the enhancements that were done in the second draw, in the first, just overall program, if that is helpful for you.
Yeah, let's do it. Let's drill down into the second draw.
Okay, sure. So obviously there's some eligibility requirements. So first-time borrowers are going to have used or have planned to use their first draw loan amounts. And there's been a lot of chatter out there. Well, what if I'm in geographic locations, I'm in New York, or if I'm in California, or Michigan, maybe Chicago, areas of that where there's been more restrictive shutdowns, and I didn't get to use all the money. And so in that case, they've actually added on some additional permissible expenses that you can, so now you could go back and look to what you've really spent your money on. And maybe I got a loan for $1 million and I, on the original permissible expenses, I had, rent and payroll and utilities and maybe mortgage interest, and I was able to use only 700, and I have $300,000
Right.
left. Well, if you
Okay.
go back to these, if you add on these enhanced expenses, you might have very well spent the money on all these permissible and expenses, and now you've utilized that eligibility requirement to have used the first draw loan amount has been satisfied. Now,
Yeah.
there has been restaurants that have been completely shuttered, and they haven't really used much of payroll, or the first time permissible expenses, these enhanced permissible expenses, and now they're thinking, I want to return the money. So if I return the money, I could get a second draw loan, and then I could almost like start that clock. Now, we've been talking to a lot of SBA attorneys who've actually reached out to the SBA, and returning is not using. So I wouldn't, before an operator plans on doing that, I would definitely speak to the bank, and I'd speak to an attorney to see if that is permissible. So
interesting. Okay.
Yeah, that's the first eligibility requirement. And I'll go over the enhancements, what those those additional expenses are that you could utilize.
Right.
So the 300, it used to be 500 employees, and now it's no more than 300 employees. And for NAICS Code 72, which is food service and hotels, those are in occupancy. Those are allowed to, sorry, I said occupancy, I meant accommodation. Those are allowed to, there's no affiliation. Those rules have been waived, and it's by location. So there's maybe, except for caterers that might have a larger amount of employees and they're standalone, they might have an issue getting to this 300 per location. But most restaurant companies are not going to have that issue.
Yeah, they're fine.
They'll fall well, even if they have per se thousands of employees, they'll still be, per location, they'll still be fine because it is by location. And then a lot of people have asked me, what is that actual measurement date? Because you could have people who in 2019 had, 300 per location, and now they have, or maybe 500, now they have 0. And the SBA really wasn't that clear on the measurement. It's really depending upon what payroll you're using, and we'll talk about that a little bit later, whether it's 2019, 2020, or you're using the 12 months previous. So with respect to that, I would say that, if you're using the 2019 payroll, maybe, you're basing on 2019 employees, maybe use that number, or maybe you just use, what you are in 2020. But again, I don't think that many operators are going to have an issue with the 300 employee requirement. The next is the 25% reduction in gross receipts. And here is where it gets a little fuzzy with some of these larger groups that might have applied on a consolidated matter. Instead of applying, they might be structured where they have a holding company and then they have underlying what they call single member LLCs. And they didn't apply. They applied as one consolidated loan instead of at each restaurant. Right. So you might have a situation where you, as a consolidated company, you're fine. You're not fine. You're okay. You're some locations did great. Some locations did not do so great. So you don't fit the bill, that eligibility requirement on the 25% reduction in gross receipts. So that issue, that's become a big issue, because if they would have applied at the lower tier level, they would have just done a second draw. They would have satisfied that eligibility requirement, and they would do second draws for those individual entities. So we're hoping for SBA guidance on that, because technically, what we've been told by, again, I always reach out to my attorney friends, and what they have told me is that whichever way you applied on the way in, on the first draw, you should be applying in the second manner on the second draw. And the reason I say that, and also we've seen through the SBA, on the second draw applications, you are going to have to put your loan, your first draw loan, and then they're going to match it up to an EIN, and it's not going to match up. If you do it in a different manner, it's not going to match up, and you're going to get rejected, and you're not going to be able to get past that error message that they have.
Right.
So that's, and there's some clients that are thinking, or people that I've spoken to within the industry, well, what if I just do a first draw PPP loan on those lower tiers? I forget about the consolidated, and now I'm going to do a first draw. And the issue with that is you have to certify on a first draw loan that
That you haven't
you
had anything
haven't
before.
received another
Yeah.
PPP loan. And
Yeah.
so you really have, because you've seen
Yeah.
it through affiliation, attribution, you've received it. So that's not a certification that I, as an operator, and then I would advise any of my clients to make that certification under
Yeah.
penalties of perjury. So,
Yeah.
so what is gross receipts? So gross receipts are your typical, net sales. So, your
Mm-hmm.
sales less your returns and allowances. And it's really by a quarter basis. So if you're in operations in 2019, in operations in 2020, you can compare any quarter. So you only have to be down one quarter to qualify. Now there's
Okay. All right.
special Yeah, there's only one quarter that one of, any quarter within within second, third, or fourth quarter. There's
Gotcha.
also special rules if you haven't been in business the whole time, to comparisons of
Right.
quarters that go there. But for the most part, it's just the one quarter. You could also, if you compare 2019 to 2020, the entire year, and if you're down by more than at least 25% in the year, that would qualify as well.
Okay.
As
Okay.
well. So
Now we've seen a lot of companies that have implemented kind of the process of helping people guide through the whole PPP second draw and first draw approach. If I understand right, and correct me if I'm wrong, that for the SBA, they're looking at the regional banks as kind of the first area that they're going to be looking at in terms of the approval for the $284 billion. Is that right?
So they're looking first to community banks, right? So the
Community.
banks
Okay.
the first to open up was community banks that were there
Gotcha.
to serve maybe the smaller, really mom and pop businesses that
Right.
might have not have been able to be served in the first round of the PPP, or were very late to the game, in that first round. So they're really those underserved areas, those community smaller banks, and then those opened up on the previous Friday, a week ago Friday. And then the larger banks opened up on Tuesday. And that's
Tuesday the
just
19th. Yeah.
for everybody.
Yeah. So the $284 billion, that's the new pool for PPP for both first round that didn't get into it and second draws that are eligible. Let's go back to the gross receipts element. How is the SBA proving, or how does a company prove to them? Is it like bank statements or their quarterly P&Ls?
Yeah,
What's kind of the process?
Yeah, there's two ways that you could present your decrease, to prove that your gross receipts decrease. One way is to show, and you could show, well, there's really three ways. Audited financial statements, if you have them, which most smaller groups are not going to have audited financial statements.
Yeah.
You could have just internally prepared financial statements, which you have to sign off, sign, date, initial every page, that you're certifying that they're accurate and true. And then if you do not have financial statements, you could show, like you said, you could show bank statements and deposits, and then just indicate on those bank statements and sort of do your own analysis, maybe in an Excel spreadsheet with that support, and sign off on all the bank statements that showing that those were the decrease in the deposits.
Yeah. Yeah. Okay. Well, that's good information. When you see smaller business, let's talk about some of the benefits in this particular bill that is helping the restaurant industry themselves. So more tuned in to the restaurant operators. What are some of the key features and benefits to those kinds of operators?
Sure. So the calculating the maximum loan amount, where it's for everybody who's not NAICS 72, it's 2.5 times the average total monthly payroll costs during either 2019, 2020, or the 1-year period before the date of loan is made. And for limited to, it's a lesser of that amount, or $2 million. But for the restaurant, for NAICS code 72 entities, they get 3.5 times. So they're giving them that extra turn on their payroll, which is obviously really beneficial to the restaurant industry. Limited to the $2 million, but for a control group, a single corporate group, depending upon your entity structure, you potentially might be able to get $4 million in total, depending upon how you applied on the first round. And so, and they define that as majority owned directly or indirectly by a common parent. So there's definitely some rules around that they're going to need to come out, some clarification, because some people, like I said before, people who applied in a certain manner on a consolidated basis for some of these larger groups, they may be missing out on a larger loan because of the way they initially filed their initial applications, because banks were
Right.
pushing consolidated loans instead of having 10 loans to have one loan.
Yeah,
So,
yeah, for sure.
so that and really the expansion of the expenses, the permissible expenses, that's been
That's huge.
very
Yeah,
huge and
that's
very
huge.
advantageous for sure.
Yeah.
So they
With
go
that,
ahead.
I'm just kind of curious on the expansion of those expenses back for the original PPP for those who got it, and also for this one, for the second draw loan. This is mainly going toward the forgivable nature. Once that and I guess the other question I have, first question is that's going across both second draw and first draw, correct?
Correct. That's
Okay.
across the whole program. It's
All right.
retroactive.
And then as far as the forgiveness, I've seen and heard from a lot of operators where they haven't been able to actually go in and fill out the form to get the forgiveness. When do we anticipate those scenarios are going to be available to execute on?
Yesterday. So the new
Oh,
forms came
okay.
out yesterday.
Okay,
the,
perfect. Great
the
news.
SBA, I will give them some credit. They, obviously they had the bones, they had the base there, the bones to make the soup. So they have just been adding to it. So yesterday they came out with the 3 applications. So
Okay.
applications for the 3508S, which is under 150, 150,000 or less. They came out with
Yep.
the easy form, and then the regular, and then the standard form. So those all came out yesterday, and they also came out with the new guidance around forgiveness. So a large IFR came out, as well as those 3 forms. So they can, if people would like to apply. I mean, the banks are still getting their arms around all of this. They don't
Mm-hmm.
receive any additional information that we don't receive, so they don't get
Yeah.
it ahead of time. At least that's anecdotally, that's what I hear from them. So so that's all out and about right now. You still have the
So,
requirement of the 60/40 though. You'd have to,
right.
your forgiveness is limited to 60% of your payroll amount. So that's something that has not changed. So while you have additional buckets for that 40%, that to get full forgiveness, besides the FTE requirements and salary reductions and some of the other provisions, forgiveness provisions, you still have to fulfill that 60% within your covered period.
So if they've within the covered period, they spent all of their PPP money on payroll, would they get 100% or only the 60%?
No, they would still get 100 if they spent it on payroll, 100%
Uh-huh.
on payroll. They would. I'm saying it's limited to 60%. So basically, what the calculation would be is you take your payroll amount, divide it by 60%, and that's the largest amount of forgiveness you could get. So if you had a
Nice.
$100,000 loan and you only spent 50,000 on eligible payroll costs, you are not, it doesn't matter what you spent on the other
I
50,
see.
you are
Okay.
limited to $83,333, of a maximum forgiveness amount. Because,
Forgiveness.
yes, because the overarching mission of this plan was obviously to get people off of unemployment and back to work, and give the
Yeah.
support to the small businesses to be able to fund that payroll.
Right. How is the SBA going to execute on that remaining balance for the PPP that's left over for these companies that were in the first draw roll, or maybe even now in the second draw? Let's say they use the 100% on payroll. They can only use 60% of it. What's the loan structure going to look like from the SBA, and when would that take place?
Well, no, I mean, the 60% rule is just like I said, is that you have to have had spent 60% of your loan on payroll to get full forgiveness. Now,
I see. To
if
get
you spend
100%,
100%, that's,
you're fine.
they're excited.
Yeah, they're
That is
happy.
great. But
Yeah.
I will put a little bit of a wrench into the, just if you were able, obviously when they expanded the program to 8 to 24 weeks, it did
Right.
enable people to spend the money within the 24 weeks, depending upon
Mm-hmm.
your individual situation. So you did
Yeah.
have that, they did have those additional weeks to fund payroll. But with another added benefit to the Economic Aid Act, is the employee retention credit. So
Right.
originally in the CARES Act, the employee retention credit was if you weren't able to participate in both programs. If you got a PPP loan, you cannot get the employee retention credit. They've since amended that with the Economic Aid Act, and now you can participate in both programs. Now, you can't
Oh,
double
okay.
dip in so much as you can't get a credit for wages that are forgiven, but
Right.
you can for wages outside of that. If you are eligible to participate in the employee retention credit, and there's rules around that, you're able to participate, potentially get credits, payroll tax credits,
Okay.
which really add up specifically for smaller, companies that are deemed to be smaller
Yeah.
employers, as well as get full forgiveness. So it's going to be now going into this forgiveness phase. There is going to be a bit of a strategy that maybe you don't want, even though you think you've spent all the money on payroll, because obviously cash is fungible, it all goes into one account. But maybe when you're doing your application, you could get that requirement of 60% and then fill other buckets. Now, we are still waiting for the SBA as well as the IRS to come out with additional guidance and just how it's actually, that interplay of the two programs is going to
Right.
work, because we want to make sure everybody's getting as much aid as possible.
Has there been any movement in the EIDL program like was in the CARES Act, where they initiated the EIDL fund? Have they expanded on that for small business loans?
Yeah, they have expanded on it. It's been open now. The grants. I mean, another positive is that the grants that were previously you had to reduce your forgiveness by those grants. Those are now, they don't reduce your forgiveness, so that's great. The emergency grant that you might have gotten, which is up to $10,000.
Right.
So that doesn't forgive, and it will be retroactive. So the banks will be given, the SBA will give that $10,000 back to the bank. So that's no longer comes into play. Yeah, the
Okay.
program. What we did see is, in the first sort of the CARES Act, and that first, say, tranche of the EIDL loans, they were,
Right.
it wasn't an easy go for sure. I mean, people had really struggled through the process. They didn't ask for enough information. So I think all programs, quite frankly, I think while there's the availability and you have all these funds, there's going to be a lot more scrutiny of who could participate in these programs. You don't have that
Yeah.
same, while the loan is a lot more flexible, affiliation rules are not waived for NAICS Code 72. You just have, it's going to be more, there's going to be no more rubber stamping from the
Yeah.
SBA, from the banks. So there's going to be, I think it's going to take a little bit more time to get the money out to the businesses, because I think we're seeing it. We're seeing they're asking for more information, and the banks want to get it right. And they also, as these rules progress, they've moved the goalpost many, many times, the SBA.
Yeah.
And
Yeah.
so the banks want to get it right. And they want to eliminate, lessons learned they want to eliminate some of those that happened in the first round, some of the fraud and just mistakes that were made.
Yeah. Now you're talking about meaning these rubber stamps aren't happening on the PPP part of it. Is that correct,
On
for
the
the second
PPP,
draw?
but on the EIDL as well. The EIDL was a
Okay.
little,
All right.
I would say the EIDL was definitely slower. And I will tell, if you take away anything from your listeners, take away anything from this, the SBA is not nimble. They're used to dealing with very simplistic structures. They're used to just simple situations. Remember,
Yeah.
the overarching mission of the SBA is to help these little guys and gals that couldn't normally go to financial institutions and get loans. They are there to help those underserved businesses. And they opened up these programs to larger entities that maybe have more complex
Right.
structures, that are just, and it's a one-size-fits-all program. So a lot of the nuances that a restaurant operator might have, and all the questions that we consistently ask, they have to remember these are all one-size-fits-all programs. So
Yeah.
many questions I have, sometimes the SBA, my contacts at the SBA, they laugh at me because they said, well, we would have never even thought of that. And I said,
Yeah.
well,
Yeah.
we're all trying to do the right thing here.
Sure, for sure. So on the idle loans, let's say a company has done an idle loan, would they be able to go back in and adjust it at any point, or is they kind of whatever they got was what they got and they're
No,
working on their
it's really whatever. They're not looking to adjust those idle loans. Now,
Okay.
on the PPP side, if you got a first round drawer, those loans you're able to potentially adjust. There's
Yeah,
very
based
specific.
on eligible expenses.
Well, no. I'm talking about if you didn't get enough, if you were shortchanged yourself in some way, shape, or form. So
Oh,
there's
okay, I see.
so there's very specific instances, and the opportunity to get additional money on your first draw is January 25th. You could go back. That's when the banks will be accepting increases or being able to reapply. So if you
Gotcha.
are a partnership and the rules were very fuzzy around partner pay. If you're a general partner and you're like acting as if another employee, you're working in that capacity. There's
Yeah.
and if you didn't include, and there's a special calculation, but if you didn't include that partner owner's compensation in the first round, you have an opportunity to include it and get additional funds in your first round. If you're a
Ah,
seasonal employer, a lot of seasonal employers were shortchanged because the rules, again, were not very
right.
clear. When people went to apply on April 3rd and the rules came out at the end of April, obviously they didn't have that clarity. So they might have shortchanged. So if you are a seasonal employer, you have the opportunity to go back, recompute your loan, and maybe get an additional funds even in your first draw. And
Yeah.
there's also scenarios if you didn't take the maximum for whatever reason. You said, you know what, I was given my maximum loan was 750. I only needed 500 at the time. I only took the 500. Well, now you say, this has gone on longer than I thought. I really do need that 250. You could go back and get that 250.
Okay.
And
All right.
and if you return a portion of the money, let's just say you had a loan of $1 million and you returned 500, or you returned all of it, you could reapply. You could get that additional money or reapply under the new rules and get that money back. So, like,
Interesting.
if you were unsure about economic certainty, because I know a lot of people, when they came out with those rules of, do you really need this loan? Is there a necessity for this loan? Are these uncertain economic conditions? Do you have no other where, are you not going to be able to get through that? There were a lot of companies, larger companies, and maybe even smaller companies that may have had a little bit more cash on hand at that time,
Yeah.
and were they just didn't feel good about making that certification. Now they could go back because they said, you know what, I really did need that money and I'm going to go back
Sure.
and get it. And they have that opportunity. So that's
Yeah.
again, helpful to overall to the industry as well.
Two last questions for you here. One is when we talk about the IRS and how and if we would be able to utilize PPP money, being operators, how are they going to be able to handle that PPP money that they brought in for employees? They made the payroll distributions. Is that going on it can't be used is it going on as a loan? If it's being forgived, how would it go, how would it be addressed from a tax position?
Right. So it was never deemed to be tax. So right. So it started off as a loan, and then when you got it forgiven, it was always going to be a non-taxable income. But the IRS position early on, they came out and they said, well, that's fine, that's not taxable, but the expenses that you paid with those payroll and rent and utilities are not anything that was forgiven. So if you had $1 million loan and you had $1 million worth of eligible expenses that were forgiven, you weren't able to deduct those expenses, which was not what is Congress's intent. So what the Economic Aid Act did was that reverse that IRS position and put into law that not only can you not have to pick up that forgiveness when you get forgiveness into income, but you can deduct the expenses that you paid with that money. I
want to make sure I got that right, because this sounds too good to be true.
It sounds like a double dip, and in essence it is.
You got the money free, but yet you can use all the expenses you paid with it as a reduction in taxes from the free money that you got.
100%.
Jeez, okay. All right, well, okay, this is why we've spent almost $5 trillion on this program, I guess.
Exactly. It was Congress's intent always, the government shut you down. If we could bail out, the banks at one point in time, large insurance companies, the
Sure.
airlines, all these that we've bailed out before, they always said the banks were too big to fail. I've always said small
Yeah.
businesses all together are way too big to fail. And so
Sure.
they're trying to do their best in order to bail out. This is their way of bailing out. I'm hoping that a Restaurant Relief Act will be in the next wave of
Right.
aid, because the Economic Aid Act was just a Band-Aid.
Yeah, yeah. And, from Biden's administration, we are seeing some signs on what, hopefully, that they can get moving more towards the restaurant industry, being a $1 trillion industry and used to employ over 16 million workers. My concern, of course, is long-term, how is that going to apply, and whether or not it's going to, be there for the future in terms of a actual opportunity for first-time employers or first-time employees and all that to grow. One last question I had in reference to operators that seized the moment and said, hey, we've made it through. Now is the time for us to actually grow our business. And they opened up a new entity or a new brand or whatever it might be. With the SBA kind of flooded with all of this, are they even going to get a shot at trying to get a normal SBA loan?
Well, yeah, it is interesting because of the environment we're in. I do have clients actually in that scenario. They are being opportunistic, or
Yeah.
they're unfortunately there might be some second generation space available in the restaurant industry
Right.
because
Exactly. Yeah.
companies. So and they have been able to get SBA loans. Again, they're in an industry that is a tremendous amount of uncertainty.
Right.
So those potential personal guarantees come into play.
Right.
Maybe the amounts will not be as large. Maybe the interest rates and the terms and whatnot, might be altered a bit. It's always been an industry with a certain level of uncertainty, for sure. And there's a lot, I would say, when you're dealing with the SBA on a regular basis on regular 7A loans or the micro loans, there's typically, a lot of information that has to be given. So I do believe, like I said before, with the PPP process and the EIDL, that there's going to be definitely, from an underwriting perspective, that due diligence that's going to be adhered to is going to be greater for sure. But there is opportunity.
So you think it's going to be
I have
greater than what a normal SBA loan would be?
I just think overall, with the uncertainty and being in the business that they're in, they're
Because
just
of
going to want to make sure,
yeah.
These loans, they're personally guaranteed, and so that helps. But more often than not, these small operators, their personal, they're outside of their businesses. That's where all their wealth is
Sure.
really in
Yeah.
their businesses. They don't have a tremendous amount of assets outside their business. And there's really, these type of loans, these traditional SBA loans, these are cash flow loans. There's not,
Yep.
there's no real assets that they have from a collateral perspective, which is also a
Exactly.
challenge. It's a challenge
Yeah.
in normal circumstances, let alone being in a pandemic.
Yeah, for sure. This is great information. It's kind of fun to kind of analyze all this, as we've been reporting on this for going on a year now for the industry. So, Stephanie, it's been great having you on to really kind of drill down into this. For all of our operators out there, make sure and visit CohnReznick over in Atlanta if you need some assistance on your accounting.
Thank you. I appreciate it. Well,
Sounds like you guys are on target there.
Yeah, I will. So we do have I am co-leader of our Sba Task Force. We have an Sba Task Force that deals with everything that you're talking about, and the CARES Act and the economic aid and the flexibility, all the acts that have come out. And so we do have a task force with 50 people. And we are helping everybody navigate through all of this, whether it's first round PPP, second round PPP, helping them with EIDLs, as best as we can. That's a little bit more straightforward. Helping with forgiveness. So those are all things that we are helping clients and people in the industry, all over the country, deal with this. So
for sure.
We've been definitely, I would say, from the first bill, March 27th, we've been entrenched in this every single day. It's going on. It's about 10 months.
It's crazy. Yeah, and it's a lot happening. You really have to do your homework. I get so many emails and social media messages from operators all over the world, and they're all in the U.S. And all are just kind of scrambling, wondering, and asking for help and information. So it's great to have you guys a resource to the country or to the industry. And again, thank you so much for stopping in on the show today.
You're welcome. Thank you for having me, and best of luck to all your listeners.
You bet. All right, so you guys are listening in over on the podcast. Maybe you're on iTunes or Spotify. Make sure and leave a review or give us a thumbs up, whatever it is that you can do to kind of tell us that you like, or maybe you want different kind of content here from the Barron Report. Happy to kind of drill down into where the industry and business is going. That's our gig here, so that's our main mission. Also, you can hit me up on Twitter at Paul Barron. That's another great way to reach me direct. Sometimes I can't respond to all the direct messages if I do follow you, so just kind of be patient there on that. And then, of course, if you have an idea that you think, hey, we should have somebody on the show, you can send us via email to producer@foodabletv.com. That's the best way. Listen, we'll catch you next time right here on the Barron Report.